Hey guys, welcome back to the channel. Wanted to go over 6 different homebuyer hacks to qualify for a higher purchase price. Now keep in mind, a lot of these products are proprietary to our company, so you're not going to see these with other banks and lenders. But let's get into what we can do and the hacks of how we can teach you or help you get pre-approved for that higher purchase price, or just get pre-approved for that home loan that you've been trying to get approved for. And maybe another lender told you that your debt to income ratio is too high, or maybe they say you don't have enough income, or whatever the reasons may be. We're here to help. We're going to solve your problem for you. So let's get into these hacks, and don't forget to subscribe to the channel. Make sure you hit that like button, and we'll get into the first hack. So the first hack is going to be student loans. So a lot of people have student loan debt, and traditionally banks, lenders require that you calculate 1% of the balance if it's not shown a minimum payment on the credit report, or if you don't have a statement showing a minimum payment. I actually have an option to where we can calculate your student loan payments and only use 0.5% of whatever the balance is towards your payment. So that could save you a ton when you're trying to calculate your debt to income ratio and qualify for that house, or even go up in price on a house for the higher purchase price, because the other lenders have told you they can't do it because your payment and your DTI is too high on those student loans. Think about cutting that in half and only using 0.5% to calculate towards your debt to income ratio. That's going to qualify you for a lot more of a house going that route. So let's get into hack number 2. So hack number 2, we've got a blended credit score loan product. What does this mean? So this means we're going to take 2 borrowers, and I see this a lot. So you have a borrower that has a 580 credit score, and you have another borrower that has a 740 credit score. So what I'm going to do is I'm going to take those 2 scores, I'm going to add those together, we're going to divide them by 2, and you're going to get a blended score of like a 660 for that one that we just went over. So with that 660 credit score, now you can both be on the loan. You can both go conventional or FHA if you choose. But what the other thing that it does is it gets you a better rate. It gets you a lower rate, lower closing costs, because now you have a higher blended rate versus going off of his 580 credit score, which wouldn't have qualified for conventional because you have to have a 620 mid score to go conventional. You'd be down at FHA, and the rate would be a lot higher because of that lower credit score. Now you've just solved the problem. Now you've qualified for a lot better rate, and now you have an option to go FHA or conventional with that blended credit score product. So that's proprietary to our company. So other banks and lenders do not offer this. They do not have access to it. So don't forget to reach out to us if you need anything when it comes to that blended credit score product. Okay? Let's get into hack number 3. So hack number 3 is we're going to use 1-year bonus or commission income. If you're a W-2 employee and you receive a salary, hourly income, whatever it may be, but you also receive an additional bonus or commission income, we're going to take that 12 months income and use that in addition to your salary or your hourly income. Okay? As long as your employer will state that it's likely to continue, we can still use that. Now keep in mind, with most other banks and lenders, they require 24 months history for bonuses or commission income in order to use it as income. So we're going to be one of the few lenders that's even going to be able to get this done for you, and this qualifies you for a higher purchase price. Okay? We're going to get into hack number 4. Hack number 4 is if you've got car loans and you're getting pre-qualified, and let's say it's you and your wife, and she doesn't need to be on the loan because you can qualify with your income, we can leave her off the loan. We can have her finance those cars into her name. Now they no longer count against you. Or the other option would be if you don't owe a whole lot on the cars and you want to just pay the car loan down. Let's say you're a single person and you need to just pay the car loan down. You can't have somebody refi that for you. You can pay that car loan down so you only have 10 payments or less. Now we no longer have to calculate that car payment against you. So that's going to be the 2 options with the car loans. Okay, I'm going to get into hack number 5. Hack number 5 is If you've got 1099 income and you get a 1099 form from someone when you go file your tax returns, okay? I can use that 1099 form as long as you have 12 months history of receiving that, minus 10% of the total on that 1099 form. I can use that as income to qualify you for a home loan. Now, you do have to have another 12 months history, whether it be a W-2 or a 1099 in the same line of work or in the same industry in order to use this. But we only have to use your most recent 1099 with 12 months history, less that 10%. No tax returns are required, so we don't care what you're filing taxes on, what you're writing off in your tax returns. We don't use that. We don't ask for it. We don't want to see it. We only want to see your 1099 form, and then if you have a previous 1099 form or a W-2. That's all we require for that. And my last hack that I'm going to share with you, because this one's huge. I just compared this with some other lenders, and I'm beating these lenders with monthly mortgage insurance. So monthly mortgage insurance with most lenders, let's say you're buying a house for $500,000, you have a 700 credit score, and you're doing 5% down, okay? With my lender, your mortgage insurance is only going to be $213 a month. With every other lender that you're going to look at or deal with, their monthly mortgage insurance is going to be about $343 a month. That's almost $130 something more than what my monthly mortgage insurance is for the same parameters. So that's going to be huge as far as qualifying for a higher purchase price, or that home that you've been trying to qualify for, the other lender told you didn't qualify because of your debt to income ratio. Maybe you're only $100, $130 over of qualifying for that home. So don't forget, hit the subscribe button, hit the like button, follow us on our next video. And like I said, we are available 24/7, 7 days a week. My number is 801-604-4949. Don't forget to reach out to me. I'm always here to help out, help you get pre-approved, and answer any questions for you. Love to hold your hand through anything. And don't forget, check our reviews online. We have a 5.0 rating. Thank you.